Sorry.
Yeah.
And now you'll be recorded.
Oh, great. This isn't gonna go out to like the World Wide Web, right? So,
Just
you
to
know,
our office.
just to your group. So are there people, I guess there's some people in Paducah watching too, right?
Possibly. Right now, we've just got Ashley on there, but I know a
Okay.
few other people said that they were gonna jump on too. So we might have some people jump on, or they might just watch it later.
Awesome. Well, yeah, so it's
Big group in here.
cool.
My goodness.
Yeah, this is great. So I'm not sure I know everybody, first off. So of course I know Amanda, Seth, Sue Ann, and
Anna and Wyatt.
yes, I know Anna. Yes, of course, I've emailed with you, Anna. Okay, great. And then Elena, yes, Elena. And of course, Steve, Christy, and
My name's Taylor.
yes. Okay, yes, I know Taylor. Yes, I do. See, I know everybody. It's hard for me to put the faces with everything. And
Shannon Crawford.
yes, Shannon. Okay, great. Erlene.
I'm Harley.
I know Erlene's known me for longer than any of y'all. So, okay, great. So let's just talk about LLCs, S corps. Some of you guys, we've already set up those type of limited liability entities for your businesses, for your real estate businesses. Others, we haven't, but kind of the reasons why you would do that and what that provides. So any type of limited liability, entity like your LLC or your S corp, just provides a level of security if you're out and someone. This is a discussion that we've had. Okay, if you are in your realtor capacity, you're always, as my understanding, you're always working individually. You know what I'm saying? So you have an individual license, correct? Okay, so if you you have errors and omissions insurance that would cover you for in your individual capacity as a realtor. Okay, so if you go out and you negligently list something for sale, or you negligently make representations to your buyers or sellers and they then sue you, I mean, I don't think your LLC is going to prevent you from, getting sued on that. Oh, there you go.
I was
That's
trying to
okay.
get on there so I can answer chats.
Yeah,
Anyway.
yeah. But what's your LLC? What's your LLC or your S corp? Whatever does provide, it provides the framework for you for your entire business. So like if for your business expenses and doing all that, and it does provide if you have employees or other people that are working for you that are non-licensed agents or whatever, that you could you send them out and they're working for you and they're not a licensed realtor, but they're working for you, and you have your LLC, your S corp, and they run over somebody in their car. Well, that's company business, right? It's not Sue Ann business or Kimberly business. That's whatever your LLC is, and so you have protection from getting sued individually in that case. Does that make sense?
Mhm.
I got a question. So
Yes.
what if we as an individual run over that person?
Yeah,
We're in
so,
the LLC?
Again, that's a very good question because
I'm not being,
no.
serious.
So there's liability protection both ways.
Yeah.
So if you individually, you and your husband are out after church and run over somebody in your car, you're driving. Well, you personally are responsible. Okay.
Right.
Now there's also, but actually, if you have a bunch of your assets in an LLC, then that LLC didn't run over anybody. So you have some protection that way too. You see what I'm saying? So it kind of protects both ways. But you can never, and this is really key, you can never just by having any entity, get out of your own liability for your own actions. Does that make sense?
Yeah.
So you still have the same level of responsibility as a realtor that you had before. You still have the same, responsibilities and have to do all that. This just adds as you grow your business, this just adds another layer of, and I look at it as an insurance policy. Okay, so it's all an insurance policy, kind of to shield you from your personal homes being at risk, that type of thing. Steve.
Okay, so because my understanding, I've always been confused about this because let's say like I'm a single member LLC for my cleaning business.
Right.
Plus we are also for our real estate business. Let's say we show a house and we accidentally don't put their cat away. Cat knocks over a lamp starts to run on fire, house burns down. Okay. My question about that is, I read somewhere that you would be protected by your LLC unless they can prove some type of negligence.
Yeah.
So what's the line of negligence?
Well, I mean, if you individually are negligent, if you individually are the one that did it, okay? So that's what I'm saying. If you individually are the one that said, hey, I knocked this over and I didn't clean it up and then whatever, then you can't, you're fully liable on that.
No
But
LLC protects.
that's right. But if it's if you own the LLC and it's one of your employees or somebody or something, okay? And let's say it's Seth, okay? Well, Seth individually could be liable, okay? But your company would not necessarily be liable unless you're there doing specific realtor business and they can tie it to responding. There's some theories there that if you're doing company business, but you would never, the LLC could be liable, but you would never be liable.
So
Does that make
here's
sense?
What I'm a little confused about is the difference between your liability for an accident
Mhm.
and actual negligence.
Well,
I mean, you know what I'm saying?
yeah,
It's like-
so there's intentional acts, something that you intentionally do, and then negligence is all accidents.
Mhm.
So let's say you go out, and this is kind of getting into insurance law, but you guys need to understand this. So let's say you have errors and omissions insurance, right? So let's say you didn't know that somebody that's listing the home, is lying about there not being a well or septic or something out there. There's nothing out there, but you don't know that or whatever. They're just depending on. Then and then you list it and you didn't do your due diligence, whatever. You don't find out the information you should have found, and you list it, and then there's liability or whatever. But then let's say the seller tells you, hey, this septic is trash out here. It's no good. We're going to try to skate it in there. I'm not going to disclose it, and you intentionally choose to hide it. That's an intentional act. Okay. That's not, your E&O coverage is not going to cover that.
Mhm.
Does that make sense?
Yeah.
You guys, so there's E&O errors and omissions, and then there's intentional acts. So for your question is to negligence, something that's negligently done. It's an accident. You didn't mean to do it. You overlooked it. You didn't intentionally choose to say, okay, I'm going to go out, I'm going to hurt this person by, failing to disclose something or whatever. Your acts of negligence are only, they're yours, okay? Unless, and they're not Seth's, they're not Sue Ann's. You see what I'm saying? So if you have an LLC, then the only way that your LLC, and if you're in the furtherance of, if you're personally in the furtherance of company business, then your company could potentially be responsible, but your employees, I'm confusing you guys. I think I'm confusing myself. So if your employees, so if you have employees that go out though, and they're doing something on your behalf or whatever, you're not personally liable, but your LLC could be. You see what I'm saying? So like my employees, if my employees are out there, they're representing me, I'm not personally liable, but my PLLC could be.
See, like I was told, if I'm working at a job, let's say, for example, and I accidentally lose control of one of my ladders and it falls on the customer's car.
Right.
That's an accident.
Correct.
Liability insurance will cover that. If I'm flying a drone, on the other hand, and I lose control of it, it smashes in, because I'm in control of it, that I've been told that that's negligence. And my LLC wouldn't protect me from that because I did it, you know what I'm saying?
Well, yeah, I mean, if you did it, it's exactly right. It's the difference between you individually doing something and your employee doing something, right? So your employee does something that doesn't reflect personally on you whatsoever. Okay. So, but it does if it's done within the confines of your LLC business. So, if they're going out and doing something that would reflect back on the LLC could be liable, but you personally wouldn't be liable. Does that make sense?
Yes. We have our car in the LLC, and I have my business truck in the LLC. But if I'm driving it and I have a stop sign, my LLC is not going to stop me from. It's not going to.
Correct. That's
stop
exactly right.
liability.
You
If
again
my
go back.
employee's driving it.
Yes. Then if your employee's driving it, you're not personally responsible. But it goes back to the key thing that I said on the front end is you are always going to be personally liable for your own actions, right?
So what are the benefits? And of course, we have an LLC for our real estate business, and ever since we started selling real estate, we've been hearing the importance of getting an LLC.
Mhm.
My understanding was the biggest benefit is for taxes.
Yeah.
And would you agree,
So-
or what do you think
so
the
I-
biggest benefit of us getting an LLC is?
You have, as you grow your business, you may bring on a staff person, you may bring on somebody that's a non-licensed individual that you hire to help you, right? Okay, if that person's out there doing company work or whatever, you don't want that to be tied back to you individually. Okay, so that's a liability that we just talked about. But then you do also are able to utilize your LLC, pay yourself a salary, and utilize some deductions. And especially as you get into S Corp, and I don't want to talk about taxes too much, but that is a major benefit of having your LLC and an S Corp. So if you start to make real money with your real estate, I would say, you know, if your net is 75 grand or more a year, you should look at doing an LLC taxed as an S Corp. Okay, because you can then start to take, and I'm talking about your net, I'm not talking about gross, okay, but I'm talking about net. That's a significant enough amount of money that but you would have to put in, you have to pay to keep your LLC going and that type of thing, but you're going to reap some benefits in deducting some expenses, some fringe benefits that you can do, and you should consult your tax provider because each one of you will have a separate situation for that. Okay. But I know S Corp in general, that's what's happened. Every time I've formed an LLC, my clients have been, you know, the ones that do well with it, it's more than just a hobby. They go and they start to earn some money in it. And then we come back and we do an S Corp election after a few years. Does that make sense?
We talked about liability from damage, but how does the LLC work? Let's say that you are buying and flipping a house and now you've hired some contractors to do some work. Let's say you're unhappy with their work and now there's some arguments over payment and that sort of thing. The contractor can only sue the LLC.
Correct.
But not you personally.
Absolutely. If you own the property in the LLC, that's absolutely correct. Yeah. If there's disputes on those type of things, then they're going to sue the owner of the.
Same with rental property, your tenants you'd be a.
Oh yeah, rental property is way more, that's the most common reason that I form LLCs for people. You guys are not so concerned about the liability aspect of it because you're mostly, you know, working for yourself already, and you're going to keep, like I said, you're going to have that liability anyway. But for rental property, that's a huge deal. If you own rental property, I don't advise owning it outside of an LLC in general. You know, I mean, and you can tell your clients that. I mean, again, you don't want to be dispensing legal advice or whatever, but I mean, if they say, hey, you know, I'm buying 4 or 5 pieces of rental property, you know, should I consider looking at an LLC? You're like, well, you know, usually the advice I've been given from other attorneys is, yeah, you want that. I mean, because that's a huge liability for them.
Do you think you should do an umbrella policy also through insurance?
So that's
LLC?
definitely, so there's different, like I said, it's all kind of insurance to keep you from, you know, from a liability perspective, it's all kind of insurance. Okay. So you've got your base insurance policy, which gives you liability up to $1 million or whatever. You've got your LLC, which keeps it away from you individually. Then you can get an umbrella policy over and above that. You can choose to do 1, 2, or all of them. You know what I'm saying? Some people choose to, I mean, there's people out here that own rental property in their own name and they have liability policies of $300,000 or whatever and no umbrella. You know what I'm saying? And to me, if you have significant assets, that's just stupid. But I mean, if they're my clients, I've told them that. And they still have, sometimes it may shock you guys to believe that some of my clients don't always listen to what I tell them.
Some of ours don't either.
Yeah,
so.
your clients never do that, right? Your clients always listen to everything you would tell them to do. So yeah. But no, that's a good point too. I mean, umbrella policy may be another $500 or $750 or $1,000 a year, depending on, but I would not put myself in the position, you know, I would not put myself in the position if I were you guys of like telling them, you know, this is what you have to do or whatever, but you might strongly suggest you need to talk to your attorney or accountant or, you know, for these types of things, you know, so it's good for you to understand it and why it's beneficial and all that stuff so that you know, everything that you all learn, just like everything that I learned, increases your knowledge and your ability to help your clients. So
I know what an LLC is, but what is an S Corp? Like, and what's the
So-
difference between the two?
So S Corp is like, and really there's no functional difference at this point. The S corp is just simply a tax election. So you can still form an S corporation if you want to. I do not form any. I don't advise it. I haven't formed any. What we formed is limited liability companies, and then you file an S corp election to have them taxed as an S corp. And what the S corp says is it's essentially a partnership with some aspects of a corporation. Okay, so there are some, again, with S corps, you get some fringe benefits. You get some ways that you pay yourself, and things that you can deduct as business expenses that you don't get as sole proprietors. Does that make sense? And I can't go through all of them because I'm not the tax person. I just know, again, I don't know how it all works. I just know that's the advice that's always given. My accountant said, go to an S corp 6 or 7 years ago. So we went to an S corp. And so.
Well, as I understand it, with an S corp, you pay yourself a base salary.
Right.
That would be reasonable for a person in your industry.
Mhm.
And then anything over that you take as
Distributions, yeah.
bonuses.
Correct.
And those bonuses then are not subject to self-employment tax.
Absolutely.
Only the base salary is. So in some cases, you could be a $10,000 or $12,000 a year savings on the self-employment tax on the bonuses.
What Steve said.
I'm like, yeah.
Yeah. So that's what I'm saying. Like, so if you start to, if you're making, if it's a part-time deal and you're making $15,000 or $20,000 a year, that's fine. You keep it simple, right? Because there's no sense spending the money. But if you're making some decent money at being a realtor, then you can be taking advantage of those type of things, and you come out money ahead.
Now, is
The
that
tricky
S
thing
corp?
is you have to pay yourself reasonable for your industry, but they don't say what reasonable is.
Yeah.
So you can't, like-
Yeah, you don't want to be paying yourself like
Yeah.
$300 a month as your base salary. But I mean,
Distributing 20,000.
that's right. That's right. It needs to be somewhere, somewhere 50-50, 40% of the total, something reasonable.
Mhm.
So, yeah. Did you have another question?
I did.
Suzanne?
So we have an LLC regarding the S corp election. Is that something you do, Greg?
No,
Or is that
your
something
accountant would do that.
the
I mean,
accountant does that? Okay.
I could do it, but it's much better for your accountant to do it. I stay in my lane, y'all. I do my real estate. I do my estate planning. And I let the tax people do that stuff.
Got it.
So, absolutely. Other questions on LLCs? Yeah.
So you helped me redo my cleaning business LLC because I did the first one myself,
Mhm.
screwed it all up, and found out that after 10 years that it really wasn't benefiting me. Can you talk about the importance of doing things, especially your finances in a business-like manner, so that they can't pierce the corporate veil? should
Sure.
you
So,
get sued?
first of all, you disclose that client information. I did not disclose anything client confidential about Steve.
Let's dive deep into this.
Yeah, exactly.
It's very simple. Don't go to legalzoom.com.
Yeah.
Don't print out forms off. the
So
internet.
now that you've disclosed that information, I will comment and say, okay, yeah, so you do have to basically have legitimate corporate documents to form your LLC. You have to have an operating agreement, formational minutes, everything that says I did this the formal legal way. Because if something happens and you do get sued and you show up to a deposition and there's another smart attorney over there and says, okay, let's go through your corporate authorizations for what you did back here when you took this action that got you sued, and you don't have any type of base documents, and you've been paying yourself, paying your mortgage through your own, through your LLC, you've been doing all kinds of stuff. They're just going to say, okay, no LLC protection. You're getting sued individually instead. They're going to amend their complaint, and they're going to sue you individually. So the key thing that Steve was mentioning is that's called piercing the corporate veil. So if we do the LLC, you have to then treat it as a separate entity from yourself. Okay. So you can't say, Amanda's got a mortgage payment due. So, hey, I've got $10,000 in the real estate account. I'll just pay it from out of the real estate account. You have to do it. And that doesn't mean you can't get the money out. You have to do a distribution, put it in your personal account, and then pay out of the personal account. Because if you see all kinds of personal transactions starting to accrue out of your business account, then they say, okay, again, not a real LLC. It's called it's alter ego. If your entity is an alter ego of yourself, they're going to pierce the corporate veil. They're going to say no LLC protection. Okay, so you guys are probably already doing this already as far as you have a separate business account for your real estate business. Just make sure that, hey, if you've taken some money and said, hey, I need to go to Walmart and get some groceries or whatever, you don't do that anymore once you form your LLC. Okay, everything needs to go through the LLC at that point. Does that answer your question? Yeah. Anything else on this, y'all?
If you form the LLC, like say mid-year, is it best just to start January, or what's your thoughts?
If you get to kind of October-ish, November-ish, I tell people just start in January. Every January, first week in January, I'll form 5 or 6 LLCs that people come to me at the end of the year. And I've said, look, don't form one now, because you're going to end up having to pay, because the state, if you form it on December 31st, they make you pay a $175 fee for owning that during the calendar year. And then, you might as well just wait. Okay. But for now, I mean, if you guys wanted to form one now, you're about halfway through the year. It's not a functional difference, because the same income and expenses are all going to flow through your personal returns initially. Because what we're going to do is we're going to file an LLC that's a disregarded entity. And so what that means is there's no separate federal income tax return for your LLC. So it's fine to start at mid-year and go, but you're right that, if it gets close to the end of the year, I always just push them back, So we form as a disregarded entity initially, and then after a few years or whatever, we flip it into an S corp, which is taxed separately. Do you guys understand that? We talked about doing it as an S corp. Some of you may want to form it initially as an S corp, and that's totally fine as well. But
determine if we just do LLC?
Well, I would, it's your income, it's
Income
kind of a income level. Talk to your accountant. Your accountant will be able to look at your personal financial situation and say, okay, here's what we can do all these things and deduct them with an S corp that we couldn't otherwise. And you have the income to justify those deductions. If you only have $15,000, $20,000 in income, it's not going to justify all the deductions. You see what I'm saying? So, cool. Does that cover that, y'all?
That's very good.
Good. Okay, so we did 23 minutes on that. So we have plenty of time to hit some other items. Okay, so let's talk about authority to list. And this has come up. I just got a call on this morning from somebody on the other side of one of Seth's deals. And I have not called them back yet, but anyway, it's fairly common to hey, you get halfway through the deal and you find out there's another person that owns a piece of this that I didn't know about, right? You may look at the deed, it may list one person. Well, that person's died, and the person you're talking to says, oh, well, I inherited this from my dad. Okay. Well, first of all, you have a duty as agents to verify that the person that you're dealing with is the correct owner. Okay. And so you obviously doing your due diligence, you go and pull the deed. If you see anything other than the same names that is on the vesting deed, and a person tells you, I have authority to list, well, you have to get more information. Okay. You have to say, okay, do you have a power of attorney? Are you a representative of a corporation or something? Do you have some sort of, and some people have legitimate, they may not be on the deed at all or have any type of association, but they may have an option to purchase the property or something. And they have they say, okay, well, I have an option to purchase. I mean, I view that as completely, you have the option to purchase it for 75,000. Well, you have the authority to list it for 110 and see if you can sell it. Right. Now you may want to get the other person that does own it to sign some sort of, agreement with you or whatever. And we've done that in the past. But so there's several situations that you're going to encounter. Number one is estates. Okay. So I inherited from my dad. That's a common situation. Sometimes there are no probates that are filed at all. So Kentucky law says you can inherit from, if there's no will, then essentially the estate goes half to spouse and half to children. Okay. If there's no spouse, it goes all to the kids. Okay. So that could be a very valid statement for somebody to say, hey, I'm the only son. My dad passed away. My mom predeceased. I'm the one that inherited. While that's true, that doesn't mean that they have the right to do anything with that without legally, verifying that and following that. So there's affidavits of descent, there's probating wills, there's affidavits of transfer by wills. Okay. So in any of those situations, if you see somebody that says, oh, I have the authority to list it and sell it, and they have not gone through the proper procedure to get that done, you need to call me or another attorney, whoever they deal with, and say, we have to go through the estate process, whatever that looks like. Okay. Sometimes you would go through the estate process, you'd file a probate, and file an affidavit of descent if there's no will. Sometimes you'd file the will and go through that process. I mean, the good news for you all is, once the will is probated or the affidavit of descent is filed, and the affidavit of transfer by will, those documents are it. You don't have to get a deed to that person's name for them to sell it. Those documents are good enough. Here's a key thing, and you guys probably have encountered this at some point. Somebody comes in and says, I'm the administrator of my dad's estate. I have all these siblings, but I'm going to sell it. I have the power to sell. Well, maybe. Okay. There either has to be a will. So if there's no will and they say I'm the administrator, they definitely do not have the power to sell the real estate. You have to get all the siblings, all the people that are on that affidavit of descent to sign. Okay. Now they can get approval, but there's a process to file in court. I've done with that's with a lot of you guys. Who's had those come up? Yeah. Okay. So probably half of you have had them come up where we have to file to get approval from the court. And we then after we get approval from the court, we have to wait 31 days after that order is entered to sell it. Okay.
So once it's gone through probate, 31 days after that.
No, if it's all the way through probate.
Yeah.
So like if you file probate and probate's closed,
Mhm.
then you don't have to do any of that stuff.
Then you're good. Okay.
The heirs will have to sell it at that point. And that's a good point to consider too. And I know I'm throwing a lot at you guys and talking really fast. Okay, so stop me if you have a question. An administrator or an executor can sell the real estate only while the estate is opened. So if Sue-Ann, you pass away, Steve is administering your estate as executor, he can sell the real estate only while the estate is opened. Okay, once the estate is closed and you no longer are executor, you have no further authority to sell, then the heirs have to sign it. And honestly, having the heirs sign off is by far preferred. So if you come to me and say, hey, Greg, we have 3 heirs and they're willing to sign, or we can have the executor who does have authority to sell under the will sign. I'm going to say, I want the heirs to sign because that's safer for me as the real estate attorney. It's much better to have them sign off. But if you can't, then, and maybe there's for whatever reason, one of them's disabled or there's some sort of, there's some sort of conflict or whatever, and you either get the judge to sign off on the power of sale, or the will itself states specifically if there's an order of sale, then that person can sell it. Okay. So I guess long story short, when you encounter these situations, if they don't say, hey, if it says I inherited it from my dad, okay, well, what's the situation? If they don't say I've had this attorney prepare, the documents and I have the power, and you get those documents from them, then just be very careful. Okay.
So let's say they do provide some documents. Do we
Yeah.
have Dora look at that, or you look at that? Or both
You-
guys, or-
You can probably, I would think that if you were relying on the representations of legal counsel as far as authority to sell, is Dora going to know what she's looking at? I don't know. I would definitely be able to look at it and see if it's legit. But especially if we're going to close it, if it's coming to close with me eventually or whatever, I'm happy to look at it on the front end. It's no big deal. It'll take 3 minutes to look at the documents. Okay. But realistically, I don't think if there's no, let me say this, there's no liability for you guys if you're relying on the representations of legal counsel of your seller, that these documents are legit. Does that make sense?
Yeah.
But
If it's holographic or something like that, it's not going to fly. Right?
yeah, so holographic wills can be probated, they can be valid, and if they are probated and they are filed by the judge, then they're just as valid. Okay, but getting them through and getting approval from the judge is not 100%. You know what I'm saying?
So let's talk about a timeline on this again, and I have faced it several times. So in the case of someone that is, okay, they just passed away and you've got this house and now the heir is the granddaughter or something. And so it has to go, and let's say there's several granddaughters. So it's got to go through probate. Probate is open.
Right.
At that point, the administrator can sell. At what point does when probate closes, then only the heirs have all
Correct,
sell?
correct. And
So at what point does probate close?
so there will be an order entering or order closing out probate. You'd have to go to, you could tell by going to the judicial building and asking the clerk and whatever. We have court data. I can tell if it's open or closed in 5 minutes. But we would verify that when we run our title as well. And if you tell us, hey, the executor wants to sell this, I'll go look and say, okay, is the estate still open? Because a lot of times people think they're still executors for many years after they're no longer
Right,
executors.
right.
Okay. And if they say, well, I got the power to sell it under the will, well, you close the estate, so you don't have no further power to sell.
Right.
Now, I would say, again, and I've said this before, the key thing is we would much rather have the heirs sign off if they will all sign off. Okay. So even if there's 3 or 4 heirs, I would much rather have them and their spouses sign off unless there's a reason why they can't.
Open or.
They're all fighting. They're all fighting.
They didn't want the
Exactly.
other person to get it all.
Exactly. In which case the executor sells it and that money goes into the estate. It's payable to the estate instead of to the heirs. Okay. So if you have any questions on the timeline, is, hey, a key thing for you to know is if you have an administrator that's going to sell, you better put it in there that it's subject to court approval. Because the administrator can sell, it's no big deal. We just have to file a motion to get the approval, and then it has to be approved by the judge.
And when you say put it in there, where are you talking about?
In your
In the
contract.
listing
Yeah.
agreement?
Well,
Or in the
yeah, I
sales
would
contract?
put it in both. Yeah. So in other words, if you have someone that comes and says, I'm the administrator of an estate, not the executor, does everybody know the difference?
Mhm.
So administrator is when there's no will. Executor is when there is a will.
Okay.
So executor can have a power of sale in the will. And if that's the case, then it gets sold based on the order or based on the authority that's put in the will. Okay. So that's probably most common. Every will that I draft gives my executor the authority to sell the real estate. It's just good attorneys put it in the will. Okay. But if there's no will, or for some reason they've gotten an online will and filled it in or something, and it's not listed that they have the authority to sell, then you have to go get court approval, which takes a minimum of 60 days. Okay. Because you have to get everybody together. You have to get the information. You have to then get in court and get an order from the judge. And then you cannot sell until 31 days after that order is entered. So you're talking at least 2 months from the date of contract to where it sells.
Okay.
So you just don't want to get in a situation where you didn't realize that timeline, and you may have represented to your buyers that they can get in, or your sellers that they can sell, and they can't. Does that make sense?
Mhm.
We already have plenty of delays for other things, but most of those usually are not on you guys. It's usually on the lending situation. But
So the subject to court approval would be something that you put in your listing agreement, and it would also be in any sales contracts.
Yep.
Now, what about, let's say if we're representing a
mhm,
buyer
Yep.
and the house is in some kind of it's an
estate,
estate,
right?
then would we put that verbiage in? to
I would
protect them
I
or
would
us?
ask, I would just ask, I mean, if you see, that's a really good question. If you see it and it says it's in an estate, then you need to ask the question of the listing agent. Is this the executor selling, are the heirs selling, or is the administrator selling pursuant to court order? Because because the heirs can sell tomorrow. Like literally, if I died and my wife wanted to sell her real estate, she could file a will, and although I've got all my stuff in a trust, we can talk about trusts on another time. But then you file the will, it's probated, and then it passes to the heirs immediately. So the heirs can sign right then. Okay, they can sign the next week. It's not a problem. But if you have to get court approval from the judge, then that's what takes time.
Court approval is needed when someone passes away, there's no will.
Mhm. And the
it
heirs are
takes-
not gonna sign off on it.
And the heirs, are they refusing to sign off or?
Well, just
is
whatever,
it-
whatever the situation is. I mean, a lot of times, or maybe there's, and this actually, I do a lot of these with the state. Maybe there's a guardian over a person.
Mhm.
So like, let's say you have an elderly person who can't sign for themselves anymore and you have a guardian, those all have to get court approval as well. So any of those where you say have a guardian or an estate like that, those have to get court approval and you just, is it the end of the world if it's not in your listing agreement? Probably not, but it would be nice for you to know on the front end, rather than have it,
Mhm.
and ultimately, this is what I'm talking about, is kind of protecting you all from liability by knowing all the information you need to know on the front end,
Mhm.
right?
So obviously having a will makes everything easier.
Having a will makes everything a lot
What
better.
kind of financial, and this might not be a question for you, it might be for an accountant or something, but like what kind of financial hindrance, I'm not sure the right word's coming to me, but obligation do you have if you don't have a will, like financially speaking, how does that affect the estate? Like, because you pay more for,
So
this is
speaking of-
definitely, this is an
speaking of
accountant tax, I
probate,
think.
yes.
Oh,
question.
you mean just for probate costs or
Right, like,
whatever?
and all of that, you know,
So not having a will means that you're not going to get to appoint your executor. So you're not going to, your executor may have to post bond. There's a lot more restrictions on who can serve as an administrator, as opposed to I can appoint executor and name almost anybody, if they're willing to serve, if you're a non-felon,
Mhm.
So there's a lot of reasons to have a will. The ease of administration of your estate is one. And if you want to go the next step and not have to worry about administering your estate, that's when you get into trusts and all this stuff. So at a minimum, again, I don't want to talk about estate planning, but a will is pretty much vitally important. And that's the
But
first
even
question
with
you want to
the
ask.
will, you'll still go through probate and
Yeah.
have those expenses, and probate would
Right.
cost approximately
A few $1,000s, you know what I'm
a
saying?
few $1,000.
Yeah.
So when my mom
Yeah.
and my dad both died with a will,
Mhm.
and what they thought all their ducks in a row, it still cost us $4,000 for probate for my dad,
Mhm.
$2,000 probate for my mom.
Wow.
Yeah.
So what we opted with Greg is we opted to get a trust so that we would not have to go through that with our kids, because we
Right.
didn't want them subject to all that.
Right, that makes sense.
I think she wanted the living trust because I was watching a lot of these murder mystery movies. So she's like, I think we need a living trust.
I'm a science rocket.
And besides that, if you don't have a will, you don't choose who gets your
Yeah.
estate.
Yeah, it just, it goes, it
The
would
state
go,
does.
the
Does,
state
yeah.
says there's a list of heirs, you know what I'm saying, that goes through.
You
But
said
you
an
gotta be
administrator, If someone dies without a will, does a court appoint an administrator?
Absolutely, yeah. So
Somebody can't just say, oh, I'm the sole heir.
there's kind of, well, if you're the only heir, then the court would not appoint someone if you objected.
I mean,
you know what
have
I'm
to have
saying?
Legal document saying I'm the administrator, right?
That's correct. That's correct. To sell anything, you have to have that,
Is there any other way to get outside of probate expenses without having a trust? I mean, would it be in the titling of all of your?
You could, yes, you could. So, and now there's tax ramifications, which again, we could discuss for another hour or two. But if your clients if everything's jointly titled, then like if you were brought a deed, so if you're looking at a deed and it is titled, Kimberly and Perry, you know what I'm saying? As joint tenants with right of survivorship, and Perry passed away, well, then you don't have to do anything else except have Kimberly sign, obviously, because that's if you read joint tenants with right of survivorship, that person passes away, that person has full authority to do everything. Okay. If you don't see that, and there's, as tenants in common, which is much more rare, you would see it usually among siblings or non-related parties. Maybe it's people that are, maybe it's like, this is a common, and I think some people in this town have done this for many years with no LLC. They've owned 50% to this person and 50% to this person, and it's a partnership essentially, right?
Mhm.
Well, if one of those passes away, then you don't just go to the wife. You have to go to the will and go see what's probated and do all that stuff and see how that 50% is allocated. So you might have this person here and then all this person's kids or whatever, if you want to, does that make sense?
If it's tenants in common.
Yeah. if it's
So
tenants in
like I
common.
have a situation where I have these two ladies and they're good friends, just good friends. And neither one of them sees marriage in their future at this point. And so they are wanting to go in together to buy a house.
Yeah.
And they would be kind of tenants in common then at that point. We haven't even got to that point yet, but,
You should talk to them about what their goals are. I mean, if it's,
but
With-
like if they both buy this house and one of them passes away and are they able to get joints with tenants rights?
they
and
can,
survivorship
you
if they
can, you
want?
can, you can be just joint, you can be joint tenants with a non-related party. That's no problem. So
Okay.
like, but I mean, that means then though, that if you pass away first, well, your estate doesn't, none of your heirs get anything. It would all go
Yeah,
to the person
their
that
heirs.
survived. That's right.
Exactly.
So-
So whatever money you paid, yeah, your brother, aunt, cousin, sister.
That's right.
daughter,
And if you have other heirs that you would rather
Sure.
have it, now they may be fine. They may say, oh, well,
At which
I'm
point
fine
you
for the other person to
choose
get it.
tenants in common.
that's correct.
Mhm.
That's correct.
Have you had anybody leave anything to a dog?
I've had people try to leave stuff to a dog.
How many
Yeah.
people wanted the dog?
No, I mean, yeah, so I think, and I actually did there is in one of the wills I just probated last year, there's a provision for $10,000 to one person with the express condition that they take the dog and take care of it. So for 10 grand, would you take a dog?
Yes.
Not my
Yeah.
parents' dog.
Yeah, it depends. It
We just
depends
kept
on the
him this
dog.
weekend.
Yeah, yeah. Probably.
Not for anybody in the world.
Listen, nope.
You can take care of it until
I
the
mean,
weekend when you take it.
There's, but honestly, it's, I've had people that wanted to leave money to, ultimately you advise them to leave money to the Humane Society or some other
Right.
whatever and that type of thing. But yeah, but to a person for the care of their animal, that has definitely happened. Yeah, anyway. Let's talk about powers of attorney really quick, because you'll get this, okay? You'll get somebody that'll say, well, I have power of attorney. And they'll give you a power of attorney, okay? And let's be honest, you guys, you understand real estate, but there are changing laws in powers of attorney, and it's changed 2 or 3 times in the last 3 or 4 years in through legislation in the Kentucky General Assembly. If you get a power of attorney, you need to have it reviewed by somebody, because there has to be specific language in it that says they have the power to sell the real estate, and it has to be notarized correctly. It has to be witnessed. If it was in the time frame when the law required witnesses, which was about 1.5 years or so, maybe even just a year, that there were witnesses that were required to be on there for a time period. Okay, and so now the law has gone back and doesn't require witnesses, but there are people that bring me powers of attorney, and I had one come up last week. And I mean, we get to closing, and they number one, they sprung a power of attorney on me and didn't say they were going to be using it. And number two, the power of attorney did not specifically say that they had the power to sell or mortgage real estate. This was on a refinance, so it wasn't involving any realtors. It was just one of the lenders in town, and they were relying on their client who said they had the power of attorney. They definitely did, but it did not give them the power to do what they needed to have done. So if you have that, then you just need to have it double checked. It's not a big
I
deal.
think a lot of people, and I've known of a lot of people that have dealt with that. They say they have power of attorney, but they do not understand the importance of that clause about being able to negotiate a real estate deal.
Yeah,
Because that's not part and parcel of it. That's not a common.
that's right.
thing
It has to be a
typical.
general power of attorney and have that as a listed power.
Mhm.
Okay. So, and again, most of the general powers of attorney that me or other attorneys in town would prepare would have that in it. Okay. But you never can tell if they've printed off the internet, they've got it from somebody. And I've had other attorneys in town that are not real estate attorneys that just whipped out the wrong form, and it's not good enough. You know what I'm saying? And believe me, I hate to tell people that stuff that they've drafted by other attorneys in town that I respect and know are not good enough, but sometimes they're not. You know what I'm saying? So that's the other thing I would say. I don't think there's a whole lot of liability for you all on there if you're relying on their representation that the power of attorney is good. But you need to know sooner rather than later if it's not. Okay. So, and you don't have to call me. Number one, I'm plenty busy. Okay. But number two, you can look in the power of attorney itself and just see, does it give that clause? If it doesn't, If it doesn't get, say power to sell real estate somewhere in there, then we got an immediate problem. If it's not notarized, obviously that's invalid, okay? If it's not witnessed, that's gonna be fine almost all the time. In fact, I think it's probably fine even though, because they used to not require witnesses at all. Then they went to the Model Power of Attorney Act in 2019. And so from 2019 to 2020, they had the Model Power of Attorney Act, which required 2 witnesses, which we always do. If you get witnesses, or if you get power of attorney, except for limited ones specific to a real estate transaction, if you get a durable power of attorney for estate planning purposes or whatever, we always have 2 witnesses anyway. But they went in their infinite wisdom, and the legislature required the 2 witnesses for about a year. And now they went back and they said, this is too hard for people to do. We're just gonna have it notarized again. Okay. So you can just eyeball it. You know what I'm saying? And if you have any questions, and if you think there's an issue with it at all, we'll be glad to review it. Okay.
I have a question. This is more general in nature. Because we want to be the very best brokerage that works with you.
Yeah.
What would you say is one of the faults that realtors do, like on a regular basis, things that bother you or things that bug you, or what would you like us to be more?
Okay.
more-
And you guys were actually very proactive on this on the front end, but not everybody does this all the time. And I will be honest, I have messed up your Keller Williams transaction fee on more than one occasion, and I apologize for that. Okay. But we're getting to where we remember it every time. Okay. We have an information sheet, and you guys have one too, that has almost all the information I need on it. You know, full names, addresses, commissions. Commissions is a big deal. I mean, I'm going to assume it's 3 and 3, but I really don't like to assume anything. So I'd like to have it in writing from you all. I have a closing info sheet, and most of you have sent it out to, and you guys have sent it back, which is great. That has all that information on there. But the key thing and I had another brokerage that, I mean, they not only they didn't send us the info sheet. I had the full names on the contract, so we had everything good there. We got it through with everything all the way through closing. Everything was fine. Everybody good at the table. When they got back, they noticed that the commission was wrong because they had negotiated a different commission. Okay, more commission. And I said, okay, that's fine. I will call the people. And they're like, nope. You know, we're just going to give it up. And I was like, well, I mean, all you had to do was look at you had to tell me what the commission was on the front end. You had to then look at it and make sure that it's correct. And so I'm like, I can't do a whole lot for you. You know what I'm saying? Although I was willing to talk to again, we're not perfect. You guys are not perfect. There are things that are going to fall through the cracks. We work with you guys all the time. I'm more than willing to talk to any buyer or seller if you would like me to, and explain what happened on any situation that may occur, right? If it's my fault, I'll explain it. If it's not my fault, I may still explain it in a way that minimizes your errors. Okay. But still, those things, you guys getting me all the information that we need and filling out our sheets, and you guys have your sheet, which is, it's pretty much all the same information. So if you have your closing information sheet, especially, I think the commissions may not be on that all the time. They're not on there. I don't
There's a
think.
field for it, I think.
Okay.
There it is.
So I don't mind to, and I will tell you this, since we had that fiasco with the other agent, I've told Valerie and Matt to be more proactive about just, if it doesn't look like, sometimes you guys send us the stuff. Okay. If you send us the information on the front end and send us a contract, we're going to be proactive about getting that information sheet to you back right then. But a lot of times it's the lender. And when the lender sends it, a lot of times we're focused on our title work and getting that back to them quickly. And then we don't send that out at that time. And when we probably should. Okay. So I've talked to them about trying to get that out quicker. So you get that early in the process and we get it earlier in the process. Because I just hate to get surprised at the closing table are no fun. Okay. And I get surprised at the closing table from time to time.
Is there anything else that you have received from agents that you go, wow, that was so nice, that was so helpful, I really appreciated that they, besides the information sheet, or
Not right offhand. I mean, because you know,
Valerie would be getting all that.
yeah. Well, one thing I'm going to try to move to at some point, so that you guys know, is for scheduling. I'm going to start moving to. You guys familiar with Calendly? Calendly. I think we're going to go to that for
Awesome.
scheduling,
That's
so that we
good.
can, so you can look and see what's available, and that's going to minimize our emails back and forth. I'm not there yet, but that's what I'm doing. That's on my to-do list.
That's nice.
Okay.
Yeah, that's.
So, because not that we don't enjoy talking to you guys, we do, but if we can limit the number of emails back and
Keep it under
forth.
10
especially-
emails.
Yeah, exactly. You know, if we can get as much information, and you can be more efficient, we can be more efficient. And so anything like that, that's so vice versa. I will share with you guys as I learn stuff, you know what I'm saying? And you guys share with me, like if you learn stuff, like because if you say, oh, well, I had a closing at this person's office and they did this, tell me, because we're more than happy to do whatever. Kimberly give me a couple of good ideas that I've started to implement, like 90% of the way there. She gave me this thing where there was what was it? It's a screen of like a welcome to these buyers,
Like,
or whatever.
Well, yeah,
Yeah.
they're- you know, congratulations, Graben family, when they walk into the office. and
Yeah.
see
Yeah, so I
Right.
have a flat screen TV that's ready to go with that, and I have a USB, and so it's all ready to go. But like, I don't have time to mess with it right now. You guys are selling too many houses. I mean, it's crazy. You know, I mean, exactly. So,
I'm just
but
glad you email us the documents. I don't know about y'all, but that is,
Yeah.
that's so much easier.
Yeah.
That's
Saves
after
us
closing,
step.
yeah, the
Yeah.
emails, right.
yeah,
Saves
that's
your paper, it saves us
that's what we
time.
wanted. We wanted to do that because we're going to scan it in anyway. We want you guys to be an easy process for y'all.
Yeah.
Yeah.
Very handy.
So yeah, but I mean, really, you guys are doing good. I mean, you're getting stuff sold. Your clients are usually prepared. You know what I'm saying? I mean, I haven't had hardly anybody walk in cashier's checks. I mean, obviously not personal checks. You know, I don't want to stress that, but I mean, usually people are coming in with, they know to get a cashier's check. You know what I'm saying? And
I learned that on my first closing at his office.
That's
I was
right.
like, oh, you can't have a personal check? I didn't know
Yeah,
that.
exactly.
For a cash purchase on a house.
yeah,
Like,
You're right.
you gotta bring in
Okay.
50 grand. It's gotta be a legit
Yeah.
cashier's check.
On the side.
Okay, we got to
Cashiers
tell our
for
buyers
all
that.
amounts, even like
Less than
$500.
$1,000, I'm
That's what-
okay.
I thought there was
Yeah.
something on that.
They won't ding me for less than 1,000. I mean, because I will get audited. I write for 3 title insurance companies and they all audit me. So I don't know which files they're gonna pull. And like I said, I always tell people, it's no offense, but I have to have your ID. I have to have your cashier's check because I know that your check is good, but they don't. You know what I'm saying? So if they audit me, I have to have it. One thing, this is in the third thing, title insurance. So with the new contract has the form in there specifically for them to refuse the title insurance if they don't want it. I think I've had that come up a couple times, and I think there may be some other agents that are kind of trying to explain title insurance in a way that I don't think it's quite right, because I know it's not, because they had to eat some fees on it. So here's the situation. The title insurance comes up, and if they buy the title policy, which I recommend on cash deals especially, or if there's I'm supposed to recommend it in all situations. I definitely understand there's situations where it's of limited benefit because they're borrowing as much as what they're, you know what I'm saying? If they're borrowing 200,000 and there's a lender's policy out there for 200,000, then a couple $100 more for the owner's policy may not even matter to them. Okay. But especially if they're doing cash purchases or they have significant equity or it's a large transaction, we always recommend the title insurance. And what happens on that is when there's title insurance in place, then we significantly reduce our fee for the title search. So our title search generally goes down to between $200 and $500, where like for a large deal, like we might charge $1,000 for a $500,000 title, search, and it would go down by $600 or $700, and there's because they're taking the primary liability, and not us. Does that make sense? Well, I had an agent that saw our preliminary, quote. So we gave him a quote based on the title insurance for a cash deal. And it was $200 for a search plus the title insurance fee, which that's pretty standard for everything up to large stuff. You guys can look back at your closing statements, and that's pretty much what it is. And well, so she explained the title insurance to her person, which she didn't allow us to talk about it. And then the person said, well, I don't want it. I'm like, okay, that's fine. So we sent back a revised CD and it was $700 for our search because it was a pretty large deal as opposed to 200. And they're like, well, I thought it was just 200. I'm like, well, you need to understand how it works. You know what I'm saying? Because generally the title insurance is not going to cost them as much as it may show on there. You see what I'm saying?
Mhm.
So, and I brought one from Carrie this morning. So this is one we closed this morning, Carrie. It's $200 for the search, $489 for the title insurance. And if we had to go back and do that and take the liability, we would have charged $400. So it cost $289 instead of $489. Does that make sense? So if
I
you're,
had that too. So
yeah.
That was.
Well, I thought that might be the case because clearly this other agent did. And so what she said was, well, I already told her it was going to be this. She paid $500 out of her commission
Oh,
to make it right. And I said, look, I said, you don't have to do that. I can talk to her about it. In fact, I think I said, how did you explain it to her? Because like, I just generally have a link that goes and explains what it covers and how it's way better for them to get the title policy than, because like, if you get a title letter from me, we do our best and we've not had any claims. We've had nothing. I'll say that in all the years I've been doing this, I've not ever had a client that's lost any money because of a title search that I've done. But we're all human or whatever. If I have a heart attack and die and my firm goes under and you have, and I talk about this with some of the banks too, because some of the banks don't like to get title insurance. Think about the liability. Rick Lampkin, my good friend Rick Lampkin, he passed away. Joe Boland got disbarred. Attorneys don't live forever. They don't always stay in business. Those title letters that they've got on their loans are worthless. So if there's an issue that comes out now and there's a problem on the title, though their people are going to be paying for it. They're going to be paying for it because there's no person for them to go to say, hey, you messed this up. Can you make it right? Okay. Whereas the title insurance covers, they've been in business 100 years. They're rated A++, whatever. They're going to be in business. They pay claims all the time. Does that make sense? So that's why we, number one, I think as realtors, if you have that sheet and I like the new form because it kind of it definitely on your end, it advises them that they should get it. And if they don't want it, that's totally fine. But if they don't want to get it, you need to make sure you're not overestimating the cost of it for them. So if you call and get us a quote from us and I say, okay, it's $200 plus $489. Well, they may say, oh, it's going to cost $500. I don't want it. Well, it's really not costing them $500. It's costing them $289. Does that make sense? Because of the discount. But I mean, I do like the form because it really protects you on that end. And they've been fully disclosed on your end. If they don't want it, I make them sign something that on my end that says that they could get it so that everybody's covered. And if something happens later, it's on them. You know what I'm saying? I mean, it's fine to,
I have
So-
several that always say they want to wait, talk to you. at
Yeah.
closing about it.
Yeah. Yeah, well, and you can always have them. We're more than happy. And Valerie is well versed in it now too. She didn't understand it for a long time either. And in fact, it might be a good thing to I can have I write for Old Republic Title, which is who most of the other ones write for as well. I could probably have them come down for a realtors meeting sometime and just kind of
That'd be
explain,
That'd be
okay,
real good.
here's all the ways that it covers your clients more than what just a title letter would cost, because I couldn't, they're in a much better financial position than I am. So to get the coverage that they would give you, I would have to charge a lot of money. You know what I'm saying? It's so that might be something good to do at one point. And it's just weird. I've just had 2 or 3 little, and I think it's since the new form has come out, they've been going through it with them on the front end instead of just saying, we'll talk to Greg about it. You see what I'm saying? Because if they're just talking to us about it, because you're having to kind of make a decision with them on the contract. And what I would do is, if I were you guys, I would not have them opt out on the contract. I would say, if you can
Yeah.
always choose not to get it.
Opt out at the closing table.
They can opt out.
Right.
If they tell me, hey, I need to talk about this and know the exact cost and I've got a form email that I send out with the link, and I can send you guys the link too. I made some notes. I could probably just send you guys the notes that I have. It has the link on what all the things that title insurance covers. Yeah,
Great.
yeah, I'll send that to you
A
guys.
lot of people ask that question. I mean, we're
Yeah.
not used to paying contract yet.
Yeah.
Personally, but.
Yeah.
I didn't realize that was on there, so we're gonna have to.
I like this.
Yeah.
Well, and we're gonna have to explain a lot more now. or
Yeah,
at
it's
least
a little more
explain.
detailed. It's definitely a little more detailed.
I think it covers us a lot better.
I think it does. It covers you as realtors. Again,
It's very thorough.
it's very thorough. Definitely a lot of attorneys got together and wrote it. Because there's so much, you know what I'm saying? I
Yes.
mean,
A lot of everything.
that's what happens. You get
It's
too many,
something a little
What
more
if she-
original.
you get
What
too
if
many
you're in Jefferson
attorneys.
County?
I know. So you get too many attorneys in one room and they've all been sued by somebody for something stupid. And
It's in
so,
there.
so they put whatever that was in there, you know?
I always try to recommend it, but if they hesitate, I say, I'll just give them your contact.
Yeah,
information.
yeah, oh yeah, oh yeah.
They always ask me what it's cost. I said, I can't even tell you. I don't even want to begin to tell you an estimate because it can vary for so many different factors. So
Absolutely.
Like,
like,
what we could say is, if you don't get it, then the title search is more expensive.
right.
So
You
it
can
kind of-
say say that, yeah.
I mean, we're not
And
saying-
they can understand that if I have to take all the liability in my office and, you know, I have to charge more for, it's my standard title letter rate that's the same as I would charge the
Right.
bank or anybody, you
At
know?
my mom's office up in Illinois, they will not close the one without the insurance. They
Well, they're
will
probably
close
not,
it.
they're not probably not attorney based.
Yeah.
They're only title insurance.
They are title,
Yeah, so
They
So
just won't do it at
that's
all.
right, because they can't. I mean, like you
Yeah.
can't, if you don't have, and that's a difference actually between like our office and just like, and then we don't really have any title companies. And even Turner had, which is our friends in Draftville, they even have an attorney that they can sign off on stuff.
That gives you
So,
options there.
Yeah,
I think
yeah.
it's just different, yeah.
It's different but it's different in other states and
Oh,
other
yeah.
places where
When
you don't have an
have title
attorney.
offices,
It's
yeah.
exactly, you can only write title insurance because you don't have an attorney to sign off on an attorney's title opinion letter.
So the reason we went to you is we told them this morning, Leslie, she's from Illinois.
Yeah.
And she's like, I don't want just a title company. I want someone that's gonna give me
Yeah,
attorney-based information.
Yeah,
That's why-
yeah.
That's how we made it with you.
that's great. Yeah, yeah, well, we appreciate that. And I mean, like, it is a difference. I mean, like, you know, I mean, if you have attorneys, or we have multiple attorneys, if I'm not available, Michaela's available or whatever. So we've seen all this stuff and we can fix it. Like that's, you know, so. Okay. I think that's mostly what I had covered. But I mean, we can talk about anything else that you guys want to talk about. Do you have anything, any issues that you're going on right now that are,
Yeah.
You can talk about mine.
I did talk about yours briefly, that the people that don't have there's like no,
Is there any, like, so briefly, Seth brought a buyer, a willing and happy buyer, is gonna be cash by his house. And the seller that signed the listing agreement
And a contract.
and all the contracts and everything lives in the house, and he owned the house until last year when he gave it to his son. So they don't have the right to sell it anymore, and the son now doesn't want to sell it
yeah. So
after
that's,
promising that he was gonna sell it, and the
He didn't.
agent listed it without
Without
really
authority.
understanding the deed, because these people have owned the house for many years.
I mean, and honestly, in thinking through that, I mean, like, that's either egregious negligence or they brought him up the deed where they owned it before. I mean, so that kind of should, so they may have misled him on listing it, maybe, I don't know.
So
He
that's
said,
kind
he
of-
said that he knew about it, but they told him that they got his verbal approval for them to sell the house. I was like,
So
that doesn't
what-
mean anything.
That's-
What
No,
kind
that
of
gets you in a lot of
recourse-
That's a
legal
lot of
trouble too,
That's right.
as an agent.
As an
Yeah.
agent, that's
So
agent
What
negligence.
kind of recourse, of course,
Of course, yeah,
Seth,
they passed
this is-
inspection, so they're out like $1,000 because they had,
so what recourse do these buyers or Seth have against the seller, the owner that was
Yeah.
given the house, or the agent, or that brokerage?
Yeah, I mean,
What would you
Seth
recommend?
has the right to file a complaint with KYR,
Okay,
with the Professional Standards Committee.
okay,
The buyers have the right to file a grievance with the KREC. Legal.
there you go. I mean, plus just standard, you know.
As a realtor, you're not to take another realtor to
the
public court,
court, right?
but you
Seth
can,
files with KYR. It's a
professional
grievance.
standards. professional standards committee.
Okay, professional standards. And
And the
buyers can file.
I
agreements
mean,
with
the buyers
KRC.
can,
Buyers can file a lawsuit. I mean,
yeah, they
can
file a lawsuit
And they-
too.
I mean,
But they can
honestly,
also file with the
But a
KRC, so
lot
the
of
KRC
times-
can do something to that person too. But
They can
They
file.
can file with KRC to access, isn't there a state? law
there's probably a live fund. Yeah, exactly.
fund To reimburse people for
Mhm,
those kind of things?
But I mean, ultimately, you would like to think that the sellers would make it right. You know what I'm saying? I mean, maybe, you know what I'm saying?
They
I'm,
said they would.
well, I tell you what, I
Yeah.
know.
That's how you're
I'm,
They also sell a lot of things.
Yeah, they also said a lot of.
this brings up a good,
a
a good, well, yeah, and they could, he sell it to somebody
Should
else,
just
you
sell
know?
it.
I mean, they could just sell it. I know, that's right. So,
Yeah,
you know, it's the liability against the other realtor is, you know, again, you guys, we're in a small town. I mean,
Mhm.
if I've had other things come up with other attorneys that have screwed stuff up, and my general policy, again, is do the best we can not to embarrass anybody, not to, you know, burn any
Right.
bridges,
Right.
because you're gonna be dealing with that agency again, or those people again, or whatever. So
Absolutely.
if you can find a way to solve the issue without, you know, going that route, I mean, having the people who ultimately, you know, maybe it's a lesson learned, you know what I'm saying? I mean, we've all been in whatever business we're in and made mistakes early on.
But it's
Right.
warning to us also.
Exactly.
Because if I understand correctly, according to the statute of frauds, nothing in a real estate deal can be oral. Nothing can be-
Absolutely. That's right. So,
Just because
I mean,
someone says, well, you know, my son's gonna sign this. after
That's
closing or
correct.
Whatever,
that's correct.
that doesn't constitute.
That's
a
correct.
Legal contract.
That's correct.
they
That's
really
correct.
didn't have a listing.
They didn't,
Yeah.
they had no
Yeah.
right to list it. That's what we're talking
They had-
about.
and that agent had no listing on the property.
Yeah.
Exactly.
Yeah, yeah.
And that's the same thing with us. If we're not listing a property or something, we can't just take somebody's word that,
That's right.
yeah, my Aunt Ines is gonna, she'll sign it, let's go and get the paperwork done.
Right.
That's why even when you have divorced people too, who can
Yes.
both sell, you gotta get both signatures.
At
Well,
what point? Let's
right.
say
That's a good point. So if you are, and we didn't talk about this, but like, that's a huge issue in Kentucky because you have statutory, you know, if somebody is married, you need to get their spouse on, and that may go without saying, on the listing agreement, on the sales
Mhm.
contract, even if it's not their name. If two people owned it and they've divorced and since remarried, both them and their new spouses have to be on there. I'm probably not telling you guys anything you don't know, but that's kind of a big deal.
Yeah. A
Well,
lot of
it's
times
like
your
the
clients don't know that.
Mhm.
They-
Oh,
They'll be like,
yeah.
I don't have to sell it. I'm divorced and we figured all that out before. Like,
Yeah, they definitely don't know
no,
that.
and I've had to do it where you're like, you know,
But did you?
you
Yeah.
can't, they won't talk to each other.
unless. they
And you have to do it
quitclaim.
in separate
Yeah,
groups.
If
and
there's a
several
quick claim
rooms.
deed, which usually one of them has taken it in the divorce and you've got a quick claim deed.
Yeah.
But many times, one of them has taken the divorce and there was never a quick claim deed
Mhm.
filed. And so we've had to file quick claim deeds. I've drafted a ton of quick claim deeds for divorce attorneys that didn't do that during the divorce.
Crazy.
So I had one that then with one of the owners, she was gonna rent to own. Remember, you did it for me. There was like, she had sold the property as like in a rent to own situation, but then those people backed out of it and we had to end that one, release that, and then
Then sell it to the real
didn't
people.
sell it to the right people
Mhm.
and yeah, so.
A mess. What are you gonna say, Steve?
If you have a buyer that say, they buy a house, they're married, whatever, and say they go through VA and they're only gonna put his name on the loan, his name on the deed. Once that house is purchased, then his spouse, say it's her, let's say it's his name on the deed, she's not on the deed.
Mhm.
She has legal rights now to that property though, right?
Yeah, she
If
has a
he purchased-
dower interest,
If
you know,
he's getting
incurring
a VA loan though, she has to sign at closing on the
on the mortgage. Yeah.
So she's might not be on the loan, but she's got to sign the mortgage.
Mhm.
And does he have the option to not put someone on the deed?
You can put anybody on the deed you want to, but I
Okay.
mean, anybody that's on the deed plus all their spouses are gonna have to sign any mortgage.
So what I'm saying is, so let's say that scenario happens and then later on they're gonna sell the house, you pull the deed, only he's on it.
Yep. Still, if they're still married, she'll still have to
They
sign
both
on
have
it.
What if they got divorced?
If they got divorced, then it's fine. So like, that's the thing is, so,
If they got divorced and he's the only one on the deed. She does not need to
She does not
sign.
need to sign.
So if
And
Mary and I got divorced before we sold the house, I would have gotten everything from it.
Yes.
Cause I bought it when I was single.
yeah, absolutely, yeah.
So yeah.
That's
So
true.
if they don't put the spouse on the deed
Mhm.
and they're married
And then, yep,
and then they get a divorce,
Yep.
then at that point it's exempted from.
yeah,
this
because
regular-
divorce defeats the right of courtesy. Courtesy only, dower and courtesy only applies if you're married at the time. It's really, they're really worried about if you pass away and you're still married, because your spouse technically has a right to your property, you know, if you're married.
But I mean,
You only
we
got-
get some weird people sometimes, like, you know, you don't want to assume that these two people are married that you're meeting with, but is your. Are they-
Yeah.
Are they gonna be on this?
You do need to ask that. I mean,
Oh, yeah, no, and they're like, then you know, you're hearing
Oh.
the way they
Oh,
talk
yeah,
to
we
each
were
other
showing a
sometimes.
couple on.
Oh,
houses,
yeah.
We
It's
realized
like,
that
is
the woman
this
was
a-
not the wife that
Is
he.
this a daughter, or is this a wife, is this just a
Like,
friend?
who is
that's
this
tagging along?
person? Because
You-
someone else altogether differently had to sign.
You get to ask those hard questions.
The
Is
more-
this,
the
is this your
ex-wife was
mistress? Who,
signing.
yeah, who is this that's with you right here?
Who is this person,
It's
and what do they have to do with this?
Right, right. Yeah. you
And we
get
kept saying, oh, so your mom wants this, your mom wants that, it was a man's daughter, but not, she wasn't the
I'm
daughter of the
grilling a
woman.
4-year-old kid over the
And they
front.
never said anything about it.
Yeah. Yeah. That's why they pay you guys the big bucks. You got to figure out all these relationships and have them all sign
And
the
still
documents.
have
And then,
everyone friendly at the end.
yeah, yeah.
Okay.
And then
that's
just,
good.
then just,
And we're like, no, the kid called her Linda.
whatever you ascertain about their relationships, just provide that information to us. You know what I'm saying?
Yeah.
That's all.
Oh, I
That's what
showed
we
up
just
at
need to
a
know that.
closing at Greg's office, and the listing agent, I don't know how I knew this, the listing agent did not know that the couple buying the house got married the weekend before the closing.
Yeah.
And
Oh,
I
yeah.
said, I didn't know she didn't take care of that. And I said, hey, you guys in the bar, congratulations on your wedding. I don't know if I saw it on Facebook or whatever. And I don't know who was in the front, Valerie was probably in the front, everyone went. "We got
What?
married?"
Mary?
We tried
Or
everything.
even worse, oh, this is actually a good one for you guys to know. If somebody dies during the term of your listing,
Oh,
that
yeah.
screws everything up. You gotta make sure, again, probate,
Mhm.
you know, and all that stuff.
I've had that happen
Or
before.
if it's husband and wife and it's fine, it goes all to the spouse, that's fine. But you need to tell us, because like I've had them where I draft all the documents, it's for Frank and Linda, and only Frank shows up, and it's like, oh, Linda died 3 months ago, and it's like, oh, well, nobody told me, so.
I
You know?
don't remember if you did this one or not, but I had one where the mom was like on death's door, like she was in a nursing home or whatever, and we were just praying that we could get it to closing before she did, because the
Yeah.
kids had a power of attorney, I think.
Yeah, we did that one.
If
Yep,
she was
that's
still
right. And-
alive, but
and then
once she
she,
passes,
Like,
yeah.
yeah, they kept thinking she was gonna die, and she kept holding on, and I guess like 2 days before, she was like, she said, God told me I have to wait, I
She's
have
gonna hold on.
paperwork
She
to
she
sign.
did.
She
She
did, she
held
said God
on.
told her she had paperwork to sign, and they
She-
hadn't told her anything about selling the house.
She
Oh,
made it,
Yeah.
yeah.
There you go.
I know,
She
goosebumps.
made it all the
Yeah.
way
That
to
gave me
closing.
goosebumps.
Yeah,
and-
and she died like a few days after.
Yep.
So
Well, that
got
was the
closed.
situation I was in. My mom was divorced long ago from my dad, never remarried. And she was selling her house, and we were getting ready to move her to Washington State. And we got the house listed and got it under contract, and she passed away.
oh my gosh.
So the listing died, the contract died, the buyers went off. And we didn't have the money to be able to pay the house payment. We had to sell it ASAP. We had to drop the price by $20,000,
Oh my
get it
gosh.
on the market again after probate. So we were
Yeah.
paying probate, we had to get
Goodness.
the house back on the market, lost a lot of money,
Wow.
which is why it's important to have a trust.
Yes.
So you newer agents, what questions do y'all have? I've got about 15 minutes. I'm gonna leave in about 14 minutes. Any questions?
We have one that we listed today. It's not went live yet, but she's
Hey.
husband died, or boyfriend died, and she's supposedly got the paperwork. And we've showed Dora, and we think it's good, but we need to run it by.
So-
She came by the office last week, I
So
think.
she has a power of
Yeah.
attorney or?
No,
Or an
she was-
estate
She was the
girlfriend
person of the will.
in the will,
They
okay.
They awarded everything.
And she has an
to
attorney
her.
that's straight down
Yes.
that for her? Good, good, okay.
So we think it's legit, but
Good,
we might need to have that checked out real quick.
Yeah.
yeah, yeah.
I will pull that paperwork right
Yeah.
now. But that's the only
yeah.
thing that we have.
Yeah,
And we love Valerie. She's like so nice. Every time I have a question, she's like, sure.
That's right.
It's my first closing, thanks so much.
That's right. That's right. Everybody's had their first closing. I had my first closing. You guys have all had your first closing, so we all know what it's like.
Yeah, I
You
think a
know?
lot of people say they're not finding somebody to notarize the papers. Greg's like, awesome.
Oh, yeah. People won't notarize stuff.
Yeah, I remember that. She's like, I'm not driving all over trying to find somebody to notarize my papers. She's like, I'm having them done this way. I'm like, oh, this. She was mean.
Have you seen anything on the new statewide contract that could be a pitfall that we should watch out for?
I looked through it and I mean, I haven't seen anything that I think is a real problem. I do think that there's so many clauses in there that you need to acquaint yourself with it and you need to be familiar with it before you use it because, it's always worse to leave something out of the contract that you should, put in. Does that make sense?
You know, yeah.
Like one thing in the statewide contract, it says is that the buyers have seen the fair housing brochure or whatever, that they're signing off that they received a copy of that, so.
I didn't
Which
just-
is not in our consumer guide, right? Correct?
it
I
is
don't know,
in-
it's like, no, it's mentioning a whole like
It's a clause
document.
on the consumer
It's
guide.
mentioning a
in our-
It's
document.
just
And
a clause on our consumer guide, it's not the full document.
No, it's saying it's mentioning a full document.
Oh, wow.
Yeah.
So it's a
Well,
separate
I-
document than what you have.
That must be something that you
The
and
Murray,
Jefferson
the
County-
Murray board one does too.
They have,
It's
that-
in our,
don't you-
that's in our stuff.
the fair housing,
You can put it in our loop. The pamphlet's in there, you can put it in the loop.
Yeah, we
The
used to
fair
sign it.
housing pamphlet.
Yeah.
the fair housing
Yeah,
pamphlet
but I
comes
was
put it in
in.
there
when I
to
was thinking
share it.
later. It's been in there a
We'll
long
see
time.
if I can
The,
find it.
Shared it.
the fair housing pamphlet is in every loan package. So the loan, when they go to borrow it, they're initialing it again that they've seen it.
Fair housing
but-
statement on consumer guide, it's just a statement.
Yeah.
This is different.
It's just a one page
It's a
thing. or
buyer
whatever.
and seller acknowledges receipt of a copy of the pamphlet, what Kentucky's fair housing law means as required by 104 KAR 1-10.
Yeah, yeah.
Are you
It's on the
using
Murray
same
contract. too.
But you're supposed to give it to them
Uh-huh.
anyway, right? So I mean, I think
Yeah, you're
that's
supposed to give it to them.
that's just codifying what you're supposed to be doing already. And whether they've seen it at the time they signed the contract, or do they have to see it then, or I think they can, if they can see it before closing. I mean, I don't know. I
I
mean,
always
like,
tell them I'm
we're
gonna send it
always-
to them when I just include it in my dot loop
yeah,
stuff,
yeah,
so.
yeah.
That's statewide. Yes, I've used it. It makes the Murray board one look like an IOU or something.
Yeah.
Yeah.
You wanna buy a house? Yeah, me too. Sign here. Okay.
I
Right.
will say the one thing on the state farm contracts that like gets a lot of people is that it talks about home warranties.
Yeah.
And like the third option, it says, buyer waives, or no, I'm sorry, it says like home warranty is not needed because it's new construction, blah, 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 or buyer waives,
Yes.
blah, blah, home warranty. Well, I got one the other day. The underwriter was like, it's a new construction house, so we need a
Oh, come on.
building occupancy or whatever. And I'm like,
Oh,
it's
No, it's
not new
not.
construction, just read the rest of the
It's
line,
right.
like.
Yeah.
So,
I mean,
I had
Yeah.
that too.
I had an underwriter that has absolutely, there has been a survey done, it's 82.5 acres. It has been done, it started out as 100, they've sold off 3 parcels.
Yeah.
It was surveyed, we have the new legal description, they kept insisting it was 2 tracks because the appraiser said it was 2 tracks.
Yeah.
Well, the problem is PVA, when they bought the 100 acres, they bought
2 tracks.
Two
and
tracks
combined
of
it in there.
land.
Yeah.
Right.
PVA will never put it into 1 track, so it's still in 2 tracks at PVA, even though it's got a legal description, a new
deed,
survey
everything.
and everything. We like to have never gotten her convinced that
goodness.
it was 1 tract of land.
Now that's what I deal with every day, y'all.
Oh,
So, I mean,
no.
that's-
And
that
then
type
I
of
was
stuff.
informed that we got a power of attorney, but we need to make sure that the underwriter will accept you using a power of attorney.
Yeah. Well, that's the same
that
deal
one
though.
drives me nuts,
Their
too.
their bank has to review all the powers of attorney. So, I mean, like,
No,
it
she
depends-
wasn't sure they would accept a power of attorney.
Oh, they would have to accept the power of attorney, I think. But it's the form of the power of attorney they want to
Right,
review,
right.
Well, like I said, I had one in last week. They're trying to do a refi. And I said, I don't think this power of attorney is going to cut it. I whipped them up a power of attorney. They took it and got it re-signed, sent it back. We're going to close sometime this week. But again, I used my form and then they had to send it up to the bank for them to look at it as well. And I said, well, I know it'll pass. So, anyway. Well, you guys always are welcome to email or text or call. I prefer email probably. Phones. And if you do email our general at hometeamtitle.net, I do see those. Okay. So if you don't have to email me directly, I still see that. And Matt also sees that and Valerie sees that. And chances are if it's a question that one of them can answer, you'll get a quicker response doing it through the general hometeamtitle.net, email.
And titles of home team title.
Titles is for Mayfield. So if you have that's a good point. If you have a Graves County file, that's all going to close over in Mayfield. And I have Michaela and all them. I still see all those as well. So my email box is overflowing. So, but I do keep track of everything. So, ultimately it's my business. I have to keep track of what's going on. So, but I know that most of the time they've got all that covered. So if you run into anything weird, either Murray or Mayfield,
Does the Mayfield office, or do you do Fulton? And,
Yeah.
All that?
yeah. So
area?
Connie over in Mayfield used to work for an attorney in Fulton. So she has extensive, in fact, we've got a lender in Fulton. So that's not I don't know why you guys would be over there very much, but I mean, it's not a very good county to search.
Homes are left.
Yeah. So where,
I
yeah,
just sold the last one.
yeah. Yeah. Is in Fulton or Hickman County. So, but no, we do the river counties. We do all those. We'll do Trigg, Lyon, Caldwell, all that,
Is there any counties in our region that you do not service?
Nothing that I can think of where you would go to, you know what I'm saying? I mean, once you get past Christian or Crittenden, it just kind of gets, I don't have real good abstractors. And it probably people wouldn't want to drive. I'm obviously, I'm not going to drive to Elkton. I love Elkton, Kentucky. I've got some friends from Todd County, but that's way over there. That's on the other side of Christian County.
Yeah.
And I'm not going to drive over there for closing. I'm not going to drive to
So any of the
Hawkinsville.
counties that are in our MLS, you cover.
Yeah,
Zolder,
and
Ballard, McCracken, and all that.
and if you get the people that are in, is Todd County in it, whatever, it doesn't. I'm just saying that as as long as they will drive here and close in our office, I can cover anywhere.
Okay.
You know what I'm saying? We've done closings in Bowling Green and Litchfield and Louisville and had one in Glasgow last month or whatever, commercial deals mainly. Anyway, if you guys get big commercial deals and you're working with like, I don't know, Marcus and Millichap is a national commercial realtor firm out of Nashville. And I've got some clients that they use them or whatever. If you get work with some of those people and maybe they would be fine to use me, but if you have some of them say, oh, well, we want to use this person because they deal with commercial stuff. We do any of the same stuff. Okay. So you don't have to use their Nashville
Their people.
closing agent or whatever, or we can do it. Does that make sense? If you get big commercial deals or whatever. So you guys are mostly residential, but thanks y'all. I appreciate it.
Thank you.
Yeah.
Appreciate it.
Yes, indeed.
Very
So
informative.
good. And so we had on the books for something next week, but we're not going to do that because